You look in front of you and you see yourself climbing up and up and up and up. You get excited. You feel an adrenaline rush come over you, and an experience you have dreamed about and have waited hoped would happen. You might think I'm talking about like a roller coaster ride, but in actuality, I've been describing the ups and downs of trading on the stock market. While it may seem scary at first to get started, and there's always a pending fear of losing money, there's so much reward to be won by jumping into the stock market. Today, I would like to share with you three simple ways to get started earning money on the stock market: by hiring a stockbroker, by picking and selecting your own stocks and investments through online services, or by setting up an app to automatically invest for you. Let's first focus on the longest running and most traditional approach, which is hiring a stockbroker. There are dozens of companies out there, such as Vanguard, Fidelity, Charles Schwab, Merrill Lynch, you name it. All these companies provide full services to both high income investors and beginners as well. Most of these brokers will require you to make a minimum investment from 1,000 to 10,000 or more just to get started, and they'll also charge you small fees, whether it be commission based or a flat price. Um, but they actually offer a lot of really good information to help you make excellent choices on your investments. Um, my friend Mikey is currently working for Morgan Stanley, and he has moved his way up the financial services ladder in the years that I've known him. Unfortunately, he's worked his way so high up that he would require me to have a $25,000 investment in order to manage my portfolio. So it's safe to say it might take a while before he can take care of it for me. In the meantime, I have taken another more cost effective approach, which is self directing investment. By this, I mean I have chosen to do my own research, purchase my own stocks, and other investments, uh, reading articles online in newspapers, which have actually, those services are somewhat free now. A good handful of the previously mentioned brokers have chosen to do away with commission fees altogether, just to stay competitive with the market because of newcomers like Robinhood, which offered customers free trading. These self-directed services allow you to pick and choose your own stocks, index funds, ETFs, whatever it is you wish. You can just simply purchase with the click of a button or the swipe of your finger. Many of the services, like Charles Schwab, allow you to easily transfer funds from your bank account and back and forth to their account, and even provide you with free analytical data, which show you popular trading trends, volumes of sales, and quarterly projections of profits to help you make the best informed choice. However, there is a small catch. Whatever you wish to purchase, you'll have to purchase an entire share at the current trading price, meaning that if one share costs 100, you'll need 100 to buy just one. I started using Charles Schwab years ago in 2016. At the time, I only had a little bit over 3,000 from a rollover retirement account. And at the time, Amazon stock was costing just under 1,000 at 996. I went ahead and purchased three, and now each one of those is worth over $3,200, which is a profit of 6,600. So, yeah, me. Besides using these online self-directed brokerage services, there are newcomers to the investment game that have redefined the way people invest. These newcomers are apps like Robinhood, Acorns, and Stash. These newcomers have allow customers to purchase smaller amounts of stocks at smaller prices and give you fractional trading. This meaning that if, let's say, a stock costs 100, you could actually purchase only a quarter of it for $25 and still benefit from any price increases. These services allow you to auto transfer money from your bank account to them, and they also allow you to auto invest that money without your needing to click and swipe and constantly check. With Acorns, unfortunately, you cannot pick and choose which investments you wish. You only have select portfolios like conservative or aggressive. But with Robinhood and Stash, however, you can individually pre-select the stocks and index funds you wish, and then have the app transfer money there and then purchase on your behalf as frequently as you like, whether it be daily, weekly, or monthly. This has been an excellent choice for me since I don't often have enough time to catch up on latest trends and stock market news, and since my life is so busy, it helps to have somebody take care of my investing. So whether you choose to hire a stockbroker or have an app manage your portfolio or do it yourself, I highly recommend you dive in as soon as you can. It is believed that only about 52% of Americans are invested in the stock market, and that's only because they're invested through the 401ks. Of those 52, only 14% actually trade themselves in the stock market with one of the methods I've mentioned. That means the vast majority of Americans are choosing not to earn extra money with their disposable income. You could choose to keep your money in a savings account, um, but at the end of the year, the bank will only give you like a dollar or two, as a thank you for, I guess, investing in them. My recommendation: put your hard-earned money to work for you and earn you some extra income all year long. I've already shown you how you can get started. It's up to you to find out how much you want to earn.